Hello friends, greetings from Advisor Shop Private Limited. Today I will be taking you through the concept of Keyman Insurance. I've gone through scores of videos on YouTube and Googled on information, and most of it is designed for the salesperson or for the business owners. Today's presentation is meant for underwriters, and we will be going through the details from an underwriter's perspective. We will now move to the definition of Keyman Insurance. Like the word Keyman Insurance says, it is a type of business insurance which is availed by business owners, companies, firms on the lives of their key person or key personnel. So who is a key person for that company? It could be someone who brings maximum business for the company or is a key driver of sales in that company, or a person who, with his vast experience and specific skill set, contributes to the profit of the company. Such people are termed as key people or key persons, and the company can identify such people on whom they need to buy a Keyman policy. Let me take you through the evolution of Keyman Insurance in India. Initially, before the insurance sector opened up for private players, Keyman Insurance was applied through short-term endowment policies. Since these were endowment policies, there were large premiums paid by the employer. And when I say short-term, the policy duration would be for 5 years, 7 years, or maximum 10 years. What I wanted to draw your attention was to some interesting scenarios that prevailed then. Firstly, there would be instances where the key person would exit the company for better prospects. So say there is a company where Mr. X is a key person and a Keyman policy has been bought. On the exit of Mr. X, the company would approach the insurer, which was only LIC of India back then, stating that they would like to continue the policy, but now with a new key person, Mr. Y. The reason being that Mr. X has already exited from the company. This kind of a policy alteration was accepted, and there would be a fresh underwriting done on the life of Mr. Y, and the same policy would be continued with an endorsement that the life assured has now changed from Mr. X to Mr. Y. There would also be a financial health check done of the company at the time of the policy alteration. Another scenario that would arise is when the company, say for example XYZ Limited, would either get acquired or merge with another company and become a completely new entity, say PQR Limited. In such instances, the new entity PQR Limited would approach the insurer stating their intent to continue with the policy, but the name of the policy owner needs to be changed from XYZ Limited to PQR Limited. This would mean getting all the relevant documents, especially of the merger and acquisition, relevant consent, NOC from the relevant parties, and again a policy alteration would be done, and the policy continued with an endorsement saying that the policy owner has now changed from XYZ Limited to PQR Limited. So this was a glimpse of the anecdotes or the scenarios which existed back then. Coming down to current times, these kind of scenarios do not prevail for the simple reason that term insurance policies are being sold as Keyman, and this is the right way to do it. So when such situations arise, it is easier for the employer or the policy owner to discontinue or lapse the existing policy and start life afresh with a new Keyman policy or a new term policy. Let us look at the benefits of a Keyman policy for the business owners. So the first point is, yes, it helps the business owners mitigate the risk of the premature exit due to death, critical illness, or disability of the key person. This is assuming that the term policy or the Keyman policy bought has the riders, critical illness riders and the disability riders along with the policy. The second benefit for the employer is that he gets to treat the premiums which he's paying under the Keyman policy as business expenses and enjoys tax benefit. The third important point, the employer can use the Keyman policy as a retention tool for the employee. It is up to the employer that he can assign the policy in favor of the employee. If the policy has been assigned to the key person, in the event of a claim, his nominee or beneficiary would be entitled to the claim amount. And additional information is that most of the small size or the mid-sized companies are the ones who will avail of Keyman policies. Large organizations typically have very robust processes and systems, which takes away the risk due to people dependency. Let us look at what are the important points that an underwriter should keep in mind. Firstly, when he looks at the Keyman addendum, the purpose or the objective of taking this Keyman policy by the employer has to come out very strongly. The other point that the underwriter has to look out for is at all times the proposer and the premium payer is the employer. The third point is that the life insured is the employee. Now you may wonder, what's the big deal about it? But let me tell you, there are instances when the underwriter, on getting into details, found out that the key person has been made an employee only for the purpose of the Keyman application. So it's important at times to get into details like checking when the employee has been brought on board, the offer letter, appointment letter, if any, and obviously the salary slip or Form 16 of the employee. The last point again is important, that you need to check the duration for which the business is operational. And you will know from the memorandum of association or the date of incorporation of the company and the financial statements to see since when the company has been profitable. There are other points that an underwriter must remember when he is scrutinizing a Keyman application. First, the stakes that the key person is holding in the firm. The regulation, or at times the business rule, prescribes that he cannot hold more than 50% stake in the company as an individual and jointly with his family more than 70% stake. However, you will get applications where this does not hold good. And this is the time for taking a discretionary decision. How to do it will be covered later. The second point is to read in tandem the gross profit, the net profit, and the salary of the employee. I will repeat it. It is important that we read all these three together because it will give us an indication about the financial health of the company and also if the employee is truly key to the organization. While we have gone through the theory and concept, there would be certain practical scenarios which you'll face in day-to-day life. I'll touch upon a few scenarios. One, the company has raised a loan of say X crores and now wants a Keyman insurance for sum assured of say X crores. The financial statements of the company will not support this kind of a risk cover. The sales argument is that if the bank can offer a loan to this company, then why can't we offer insurance? What is a bigger risk that the insurance company is taking, which is much higher than what the bank has offered as a loan? Well, again, this is a kind of a scenario which is often faced in real life. Another scenario that we come out with is the company may not be 3 years old and it does not have 3 years financial statements. It's basically a startup or a new venture which has started. And your question to the sales guy is, if a company is not profitable, why do they need a Keyman policy? Yes, there is an exception to this scenario because there could be some co-founders who have come together and invested a lot of money and they believe that they need to mitigate this risk that none of the co-founders or the management team exits till the company hits the ground and is running. Yes, from their perspective, this is a risk which they would like to mitigate. How do you go about with it when you do not have the 3 years balance sheet and a P&L account of the company? These were two scenarios just to give you an insight of the underwriter's dilemma. And how do you act in such situations? How do you strike the balance between getting business for your company but not compromising on the risk and the compliance? So, to summarize, I would say the underwriter has to keep in mind while assessing a keyman's application, one, the purpose of taking the keyman needs to come out very strongly. Second, the crux of this entire keyman application is the financial underwriting of the company, and that is the most critical part. And third, obviously, the medical underwriting of the key person. If I had to put a weightage to it, I would say 70% of the time, effort, and the detailing of the underwriter should go into the financial underwriting of the company. The second important part, where he should focus on reading the documents, is to make sure that the purpose of taking the key man is achieved or is correct. And third, obviously, is the medical underwriting. Remember, as an underwriter, your role is to rule out anti-selection. But you also need to remember here that the employer is passing on the risk of his likely business impact to your company as an insurer. So when he's passing on the risk, you have to make sure this is not at the cost of compliance and risk of your company. So we come to the conclusion of this current presentation, and thank you friends for your patient hearing. For any customized training module on any topic of insurance, please feel free to reach out to us on the coordinates which have been given below. Looking forward to many more such interactive discussions with you. Thank you. Good luck. God bless.